Hi everyone, I'm Haya and we are Group9 and I'm the first speaker in our presentation and our group is focused on the uh, credit union in Vancouver, its Vancity. I'll move to the slide of our group and start my presentation. When we talk about finance, we really think of profits, interest rate, or investments. But can finance be used to actually solve social problems? That's where social finance comes in. And to make this idea a bit more relatable, in my mind, social finance is kind of like what our MBA in CED is to a traditional MBA. It's still about money, strategy, and management, but with purpose. It focuses on values like equity, sustainability, long-term community impact, non-profit, not just finance returns. So before we dive into our case study, let's take a moment to understand what social finance actually means. This chart shows a spectrum from purely social on the left to purely finance on the right. On the far left, we have things like non-profit organizations, family foundation, social sector program, religious institution. These groups are mainly focused on social impact, not making money. And on the far right, you've got your typical financial players, for-profit business, stockbroker, corporate bonds, commercial banks, and that's mainly the main goal is profit. And then right in the middle and is where social finance sits. It connects both sides. Here you find tools and actors like social entrepreneurs, impact bonds, social purpose business, and social investment funds that are trying to do both create positive social outcomes and at the same time achieve financial returns. So, social finance is not charity, but it's also just profit seeking either. It's about using financial tools to help solve real-world problems, whether that's poverty, climate change, or inequity, and that's why it matters. Recently, social finance has become more popular, and it aims to create both economic and social or environment impact, not just profits. It comes in many forms like microfinance, impact bonds, credit, cooperative crowdfunding, and more. In our group project, we are focusing on Vancity Credit Union, which is a credit cooperative. Credit unions are like banks. They offer similar services like savings, loans, and debt cards. But the biggest difference in this picture is that they are not for profit and their members own them. This means the profit goes back to the members or the community, not to investors. Let's look at how this actually works in real life. Vancity is one of the largest credit unions in Canada based in British Columbia. It was founded in 1946 and now has over 500,000 members. It manages more than 30 billion in assets. Unlike traditional banks, Vancity operates with a strong social mission. Like this word in their official website, our goal is to make it so you don't have to choose between your wallet and the world. Vancity doesn't just wait until it makes a profit and then donates money. It actually makes its lending in investment decisions based on social and environment values. That means when you deposit money here, you're helping fund affordable housing or climate solutions, not pipelines. And they have 5 core areas that Vancity emphasizes on the left in this slide. And basically, they make sure that the money from their members is used to support these key areas. The first one is climate action. Their goal is to achieve net zero emissions by 2040, which means the loans they give out won't contribute to more carbon emissions. So how do they do that? For example, they only give mortgage to green certificate buildings, and they encourage borrowers to upgrade their homes with energy-sufficient systems. They also refuse to lend to fossil fuel companies and like that. The second one is financial inclusion, and inclusion has always been one of Vancity's cornerstones. They support refugees, newcomers, women, racialized communities, remote areas, and indigenous people. They also run financial knowledge seminars in communities to help others better understand money and how to manage it in their families. The third one is building affordable housing. As someone who plans to move to Vancouver, I know just how scary the housing prices are there. But putting your money in Vancity, a portion is invested in affordable housing project. That is good. Since 2011, they supported the development of rental housing, and they return 30% of their net profits back into BC community. The fourth point is reconciliation. Focusing on Indigenous community, Vancity was the first financial institutions in Canada to recognize Indigenous governments as lending entities. They provide housing solutions and wealth building workshops for Indigenous members. And the last one is about equity and anti-racism. Vancity invests in development programs for Black communities and works to build economic fairness. Inside the organization, they are also committed to leadership diversity. On their board. 67% are women, 56% are IBPOC, and 22% are 2SLGBTQIA, and 11% are persons with disabilities. So yeah, what really makes Vancity stand out is that it characteristically blends, financial sustainability with community development goals, and that's something we'll be diving into today. Now let's take a closer look at our case study.
Hi, Professor, I'm Ruby, and welcome to our group's presentation. Continuing from highest part, I will introduce the Vancity's real-life actions. First, as you can see from the page, Vancity's values are divided into 4 core concepts: reconciliation, integrity, innovation, and responsibility. Starting from those 4 concepts, we can take a look at what Vancity has done. Let's take a look at this chart first. You can see that the employee experience scores have been quite high every year. In 2024, Vancity was again named one of Canada's top 100 employers. They were recognized for helping employers growing and offering good parental leave and caring about the community. Vancity is also one of the biggest private companies in Canada to pay a living wage. In 2024, they were approved again based on Metro Vancouver's living wage of $25.68 an hour. This reflects Vancity's actions on human and intellectual So in the past 2 years, they have won many awards. Next is about social. In 2024, Vancity developed Vancity 2.0. So what is Vancity 2.0? It is a renewed commitment to their core values, paired with a bold vision for the future. For example, Frontier Collective teamed up with Vancity to launch the Vancity Innovation House and support Vancouver's tech scene. Vancity is also pushing forward with its 2.0 plan and working with the government. They talked to different parties about affordable housing, financing, inclusion, and strong options, reconciliations, and climate actions. So it is clearly that Vancity is pushing in real effort here. Next is about natural and manufactured. Vancity runs a community investment bank that helps fund developers to building affordable and green community across Canada. And it is actively involved in real estate related businesses. At the same time, the Net Zero Banking Alliance, we can see from the chart that by 2030, emissions need to be brought down below the zero. Next, regarding financials, let's first look at some relevant data regarding assets under administration and liabilities. From the first chart in the top left corner, we can see that Vancity have been growing steadily year by year. The goal for 2024 is $36 billion. Also, member loan funds are expanding, which are both positive signs. As we can see from the data, Vancity's capital base is already quite large, which is closely related to their constantly value-based strategy. And let's look at a few key figures. First, Vancity's core revenue increased by 5.6% compared to the previous year, and which means that Vancity's model is continuing to succeed. Vancity's operating earnings began to turn a profit, and better cost control and operating structure achieved its result. Furthermore, more and more customers are willing to manage their funds with Vancity, which also shows that Vancity's values are constantly being accepted by different people and customers. Customer satisfaction is also constantly rising, and this higher satisfaction allows Vancity to better attract new customers and new members. Regarding emissions, Vancity is working hard to meet its commitments, and emissions are constantly growing down. Okay, let's move on to cooperations and community. Each year, Vancity allocated 30% of net profits to our shared success program. It continues to contribute to its members and reinvest in the community. For this chart, we see how many money Vancity puts into the community every year, and it shows that Vancity is truly using its funds to support members and local people and make a real differences in the community. For example, BCCA. The BCCA is a non-profit that bringing co-ops and credit unions together to connect, to learning, and to support each others. They run workshops, speak up to government, and help building strong communities. In 2024, Vancity continued its support for BCCA with a yearly $100,000 contribution, and as it has for the past 3 years. And when it comes to equity and reconciliation, Vancity has established many organizations to further promote the concept. For example, the Women Entrepreneur Program is made to help women and non-binary people run their businesses. The Black Entrepreneurship Program gives loans to Black businesses owners and groups to support fairness. The 7.6 score in the chart also shows that people are quite happy with this program. And related to life is housing. Varsity offers mortgage programs to make housing more affordable. In 2024, Varsity helped build or upgrade 1,924 affordable housing units and invested $1 million through its affordable housing program. It also supported 2 organizations with deposit pools generating $1.45 million and $2.44 million. For them, the chart is bottom right clearly shows that the number of housing units benefiting every year. Finally, I'd like to talk about climate change. From the top left chart, we can see that Vasti's own operational emissions are just a teeny part. This shows they are leading by example because the real impact comes from helping their clients and other businesses do the same. They also shows another side of what a CED is all about. Greenhouse gas emissions have also been going down year by year. The 2 charts at the bottom are also about energy saving and emission reduction, and they both show the progress Varsity has made through its actions. My team member Haya already mentioned the difference between Varsity and traditional banks, and I'd like to briefly explain something here. Varsity focus on community returns, while traditional banks aimed to maximize maximize profit. Varsity put 30% of its profits into members and local projects and uses deposits to support local businesses. Traditional banks mainly give profits to shareholders and focus on financial returns. Most importantly, Varsity values reconciliation, inclusion, equity, and climate action, while traditional banks focus on more market share and profit. Okay, my speech concludes. Thank you, Professor. Next is Sylvia.
Hi, I'm Sylvie. First, let's go back to Vancouver in 1946. And that time, most banks would only serve people from certain neighborhood, and it can be street, which I showed in the slide was more than just a road. It was almost an invisible barrier. If you live east of a chemistry, especially if you are an immigrant or working class, getting a mortgage was nearly impossible. For women, the barriers were even higher. In many cases, a woman could not get a loan unless a man, usually her father or husband, signed for her. Things that we see as a basic banking today, open an account, getting a mortgage, and were seemingly out of reach for many people back then. This is where once it changed the game, they become Canada's first open bond credit union open to anyone regardless of where they live, what job they had, and their gender. They pioneered gender and class inclusion in finance, and they broke both the psychoeconomic and geographic barrier in Vancouver. They didn't just follow the rule, they revoked them. From offering mortgage to exclude community east of the chemistry to provide fair terms and restrictive agreement for sales contract. One city proved that banking could be both inclusive and innovative. Okay, let's talk about Wednesday's roles in supporting the local economy. In 2024, 71% of Wednesday's purchases, that's about 100 to 28 million Canadian dollar, come directly from local businesses in British Columbia and Ontario. This is not just a number. It means money is staying within the community, circulating among the local suppliers, service providers, and workers. This is very important because when a dollar is spending locally, it often gets spent again and again within the same region. What we call the local multiplier effect. It keeps jobs here, it helps small business grow, it reduces economic leakage to big corporations far away. One city also invested directly in communities. In 2024, they approved $5 million in community grants, well less than the previous years, but it still represents a significant commitment to local projects from social enterprise to environmental initiatives. And here's the key difference. In traditional bank, the profits goes to the distant shareholder you will never meet. With Vancity, those profits go back to the people and the place you actually care about, the community where you live and work. This is a slide actually reminds me of the conversation I had with an older lady here in Sydney. I was telling her about how difficult it is for young people to stay here because they aren't enough job opportunities. She told me that yes, Sydney has tried to bring big companies before, but in the end, those companies left and the local people get nothing. So it's not just about where money goes, it's also about who gets access to it. And next night you can see one city focus on heavily on supporting the small business. That's really important because small business are often the heart of the community. They can also be the ones that struggle most to get funding from the big banks. Let's look at this chart. This chart shows small business loans on the $215,000 over the past 3 years. In 2022, there were just over 5 loans, but 2024, that number has almost tripled. Why does that matter? Well, when small business grow, they hire local people to create jobs right here in the community. So fewer people have to move away to find jobs in big cities. It also means more local tax revenue, which can be reinvested in things like schools, parks, and public service. And people have steady jobs close to home. It lowers the risk of poverty, strengthens social stability, and let people live with peace. So this is not just lending; it's investing in the community's future, keeping the local community strong, and making sure opportunities stay close to home. Now let's talk about how Wednesday wants the equity and the fight against racism. When we say the financial equity, we mean make sure that everyone, no matter their background, has access to the financial opportunities. This isn't just a slogan. Wednesday put people first in very concrete way. A great example from Wednesday's early story, the very first loan they ever issued was to a woman. And remember, back then, women could not get a loan without a man's signature. This was a bold statement. They weren't just following the rules of the time, they will change them. Fast forward to recent years. In 2022, Van City signed the Black Force Pledge, and in 2023, they invested over $540,000, almost 4% of their community investment budget, especially to serve the Black community. It's also about the leadership diversity. If you look at the number from the 2022, women make up 67% of the board of directors and 55% of senior management. Indigenous, Black, and the people of the color have meaningful representation along with members of 2S LGBTQIA plus community and people with disability. Why does it matter? Because when the leadership reflects the diversity of the community, decisions are made with more perspective, more empathy, and more fairness. Next, I would like to talk about one city's innovative approach to climate action. When city doesn't treat environmental responsibility as just an extra corporate social responsibility project, it integrates it directly into core banking operation. In other words, when they decide on loans, mortgage, and investment, the environmental impact is considered from the very start. They channel financial flow into green housing, renewable energy, and the community sustainable project. This is not just about doing good, it's about proving that bank can be profitable while also delivering measurable environmental benefits. What's even more remarkable is that one city became the first credit union in Canada committed to achieve net zero emission for all loans and mortgage by 2040. In addition, they have created an ethic principle for business relationship to ensure that their partnership align not only with the environmental goals but also with the social values. For example, through City's investment management, that they successfully persuade Starbucks to publish a sustainability report on Arabica coffee beans. This is move pushes Starbucks to be more transparent about how they source their coffee, how they support farmers, and how they address climate related risk in coffee production. This case shows when city's influence extend beyond local community and to global supply chain. Through this effort, Advances is positioning banking as a driver of the low carbon economy and influencing other financial institutions to rethink how they operate. Look at those numbers left. We can see this isn't just a charity, it's a smart target investment that addressed the housing crisis that reduced the risk of homelessness. What's unique here is how NCT also uses its own branch as a part of the solution. When they renovated or built a new branch, they work with the partners to build affordable homes above their buildings where possible. So their physical presence in a community doesn't just offer banking service, it's create a real tangible housing. This model set a precedent for the banking sector, combining finance with the measurable social impact. It shows that a financial institution can directly tackle a social issue instead of leaving it to the government or charity alone. When we think about reconciliation, we are often imagine this kind of official statement, but for the one city, it's about turning words into action. So there's a lot of words in this slide. I won't talk more, and then I can conclude that one city shows that reconciliation can be more than a promise. It can be real, measurable path towards shared prosperity. While one city has done a lot of great things, it's not without its challenge. It still have a lot of areas for improvement. One big issue that is heavily dependent on Canadian market for income. This means if there is any political, economic, and even environmental trouble here, it could hit one city directly. And because it's focused on one region, its growth opportunity and market share are naturally limited compared to more diversified players. Another challenge is competition. It's not just a big national bank. Fintech companies are growing fast and targeting the same customer. We also cannot ignore the low interest rate environment in recent years, which has put pressure on profits and made it harder to balance financial performance with their social mission. And there's the tricky balance between the cost cutting and the community culture. For example, in 2024, one city laid off 7% of its staff, or around 200 people. Financially, it might be necessary, but socially, it risks damage trust within the community. So going forward, one city needs to navigate this risk carefully, making sure that they adapt to market change without losing sight of their core values. Now let's look at another challenge. Governors' concern, especially the board pay raise rejection. Early this year, one city's members were asked to vote a proposal to increase board compensation. The timing was sensitive. It came right after staff laid off, which affect nearly 200 employees. Not surprisingly, members voted down. This decision highlighted deeper tension, the gap between the leadership decision and the member expectation in a cooperative model like Vancity's. Members expect transparency, fairness, and alignment with the shared value, but on the other hand, if compensation and benefits are not competitive, it becomes difficult to attract and retain top management talent. So finding a balance, one that keeps members satisfied while ensuring the organization can recruit and keep skilled leaders is itself an ongoing challenge. While the rejection was a setback for the board, it also reinforced something positive, the power of the member oversight. It reminded everyone that at the end of the day, Wednesday is owned by its member, and they have a direct say in protecting the organization's cooperative mission. Thank you for your engagement with this case study on Wednesday Credit Union. Our group member is Hui Wang, Haya, Sanan Ruby, Jason, Sylvie. Thanks so much again.